Alright, so today's October 24th. This is our report for Transcend investors. And this is part of our rebalancing efforts, to be realigned with the goals of the goals for the client. And with that, I want to talk in particular about a trade that I've made on October 23rd with General Electric. That on the 23rd, I bought 517 shares of General Electric for a total cost of $4.7 million. That was $9.09 per share. What led me to this company was the belief in this new CEO, Larry Clupp, who is currently leading the turnaround, which has contributed to a positive free cash flow, which is always a good outlook for lenders and investors. It's also been good debt reduction, and lenders and investors and especially care about debt reduction because it could lead to more value for shareholders. The company no longer has hidden debt from legacy insurance liabilities. It's also important to note that most of GE's value lies in its aerospace division, which has a 5% increase, projected increase in the aerospace. Barron's Stock Alert also reported that GE's shares are up 21% year to date, which was believed to be a good comparison compared to the Dow Jones industry average. To conclude, the company thinks that they could reduce their industrial debt by 2.5 times by the end of 2020. And it's also important to note that most of GE's industrial debt comes from their capital, from GE Capital, which is a large financial institution that's owned by General Electric industrial business. So it's really a value-added business for General Electric.
My name is Jamal Wiley. I am the lead advisor for the investment group, Transcend Investors. I like to briefly discuss one of our stocks that we currently manage in our portfolio, ExxonMobil, who closed at 67.61 on Friday. That equates to a decrease of 53 cents, which means they're down by 0.7% from last week. ExxonMobil stated a worldwide revenue of $279 billion in the year 2018. That's a 32% decrease from 2014 when it reported $421 in worldwide revenue. ExxonMobil's lowermost revenue was recorded in the year 2016 at $218 billion. ExxonMobil will face a trial next. I gotta start over. I lost my place. Is there any way, could you
Edit between.
Yeah, edit between. Edit between the shakes.
Edit between. Yeah.
Okay, bring me back in and cut me out. Okay.
Yeah. So you want to restart the whole thing?
No.
Just a certain part.
Yeah. So our plan. My name is Jamal Wiley. I am the lead advisor for the investment group, Transcend Investors. I like to briefly discuss one of our stocks that we currently manage in our portfolio, ExxonMobil, who closed at 67.61 on Friday. That equates to a decrease of 53 cents, which means they're down by 0.7% from last week. ExxonMobil stated a worldwide revenue of $279 billion in the year 2018. That's a 32% decrease from 2014 when it reported $421 in worldwide revenue. ExxonMobil's lowermost revenue was recorded in the year 2016 at $218 billion. So our plan this week is to trade all of our ExxonMobil shares. Here's why. ExxonMobil will face a trial next week after being accused of misleading us as shareholders regarding the financial risks we will face as a result of the climate change. Ultimately, ExxonMobil Corporation is doing more harm to our portfolio than it is good. So, Wayfair Incorporated closed at $109.20 on Friday. That's a decrease of $5.38, marking a 44.7% decline from last Friday's closing price. This decrease is significant. We still believe the cost of Wayfair isn't vindicated by the terrible stipulations, as we believe that doubling down on Wayfair is extremely threatening, giving high cash burn and zero signs of lucrativeness.
Hello, my name is Messiah Marcus. I am the full operations oversight for the Transcend investors. So this week I just wanted to talk about some of the trades I made. So unfortunately we decided to sell Terraform Power Inc. because it wasn't performing as well as expected compared to what it was doing before when we first invested in it. And after doing further research, we saw that compared to its previous years, it just wasn't performing as well. And in replacement for Terraform Power Inc., we decided to incorporate some of our investments in Under Armour. Reason being is because the Under Armour CEO, Kevin Plank, has decided to step down. And we believe because of this, the value of Under Armour will simply rise. And it has already proven to be a good move, as we have gained profit of $161,756.91 from investing in Under Armour itself. And we bought at a low price for around $18, $19. And then as for the other companies, Oniak is currently up, recently increasing their quarterly dividend from 2.5 cents per share to about 91.5 cents per share. So that's resulting in an annualized dividend of $3.66 per share. Intuitive Surgical is still performing as expected. It's currently up and is giving us a profit of $168,754.41 as the increase in use of robotics for surgeries is increasing and becoming more popular worldwide, or in America itself. UPS, unfortunately, is currently down, but we will continue to keep on doing research on UPS. And Yum China is up as well, surpassing the industry average. So as of right now, some of the stocks are decent, and we believe that Under Armour has been a good move to buy in for the recent week.
All right, good morning. My name is Carter Bird, and I will just be talking about some of the trades I made this week as well. So we decided to walk away from our investment in iPath Oil Company, given its poor performance. We've been holding on to that for a long time now, and it continued to decrease in price. So we decided to cut that off and not lose any more money. So we completely reinvested the $4.7 million we had into that oil company, and we decided to reinvest it into the water company called Athens Water Supply and Sewage Company. I've been looking very closely at Athens because I'm attracted to its fundamentals and performance. I look at the company as a whole as a potential investment. I believe it has a lot to offer. Basically, it's a very financially healthy company with a strong track record and performance, and it's trading at a very good value right now that's increasing. I can expand actually a little bit more on the key aspects of the company. So in the previous year, the company actually ramped up its bottom line performance by 11%, with its latest earnings level surpassing its average level over the last 5 years. In addition to beating its historical values, Athens Water Supply Sewage Company has also outperformed its entire industry, which delivered a growth of 6.8% last year. So Athens' main ability to maintain an adequate level of cash to meet upcoming liabilities is a very good sign for its financial health and total. So we just believe that's a very good and solid investment moving forward. We believe that its cash and cost levels are all good, and which is important determinant to the company's financial health. So we completely reinvested the $4.7 million from the oil company, and we're reinvesting it into the water industry.
I'll say, good morning, my name is Devin Joyner. Today I want to speak on the recent transaction I did yesterday on October 23rd. So we had decided to sell AT&T Incorporation due to the fact that it was not performing well in our portfolio. Over the past few weeks, as I've been watching and then overlooking the stock, I've noticed that it's continuously decreasing and not gaining the portfolio any money. So we decided to sell it for $4.8 million after buying it for $4.7 million. and we gained a net profit of 77,000 roughly. So the new company that we're deciding to invest in is Netflix Incorporated, and we bought 20,000 shares at a price of $271, and overall this totaled $5.4 million roughly, and decided to buy this stock after doing more research in the company and going off of the past 5 weeks of how it's been performing. So moving forward, I will continue to watch this stock and make sure that it doesn't perform as bad as AT&T did. And the other companies that I had, Google, Entity Corp, and Amazon, those are continuously doing their job and not losing their portfolio money. So we're gonna keep an eye on that and make sure that we keep investing in the company and make sure that overall the portfolio is working how it's supposed to work.